What's up, my future legends? We had a bearish day on Friday, and Bitcoin's been pulling back for 3.5 weeks. So that means the markets are reversing and we're getting ready to go into a bear market, doesn't it? Or does it? Well, let's see. Let's go ahead and look at some things and see if we should be scared and looking for bearish positions, or if we should just continue with the overall narrative, which the markets are generally bullish right now. All right, let's get started with Mr. Bitcoin. So we do have 3 red weeks right here. We've got monthly support sitting at $60,622. A lot of people are looking for Bitcoin to come down and liquidate that $56,500 low. That is April's low. And there you can see right here, April's low. That's the low everybody is expecting Bitcoin to liquidate. As of Sunday night at 12 p.m. Eastern Standard, or 12 a.m. Eastern Standard Time, we will have a new quarterly chart, or a new quarterly candle, and a new monthly candle. The weekly close will be tonight, but it won't be until midnight tonight where we actually get a new quarterly and monthly candle. You can see this quarterly candle looks okay compared to last quarter. It doesn't look like anything more than a pullback from here. Like I said, it structurally is still bullish as you are just consolidating in a very large range, which is fine and dandy. That's typically what we like to see. As of right now, as long as monthly support stays intact today and tonight, then I like it still higher, even though it looks like it's making a bear flag here and it's definitely going to go lower. I still like to buy it around the bottom edge of the range. Obviously, I'm using tight stops. That way, if I'm wrong quickly and I don't have to sit in huge drawdowns. I just simply lose 1 or 2% and move on, wait for my next entry. Currently, Bitcoin is struggling at $61,786, which is daily resistance, daily res. So we'll watch today or the rest of today to see if Bitcoin is able to break out above this level. If it's not able to break above it, then we'll watch for a retest of daily support, which sets a little bit lower than monthly support, roughly right around $60,261. We did test daily support here on Friday, and daily support held. Yesterday we had a very small bullish day. Today we have a semi-small bullish day. It is bigger than 1%. Let's see here. It's setting roughly right now around 1.09%. So just a little bit bigger than a percent move today. Nothing to write home about. So as of right now, the way we're trading it here at Trade Talk is we're going to be trading the intraday ranges. We're going to be looking to get long at daily supports or get bearish around daily resistance levels or, higher time frame levels. We're just going to continue to trade it the way we've been trading it inside the ranges. And then if we get continuation from wherever our entry is, then we'll leave that entry on for that continuation. Moving on to the S&P 500. All right, so right now I give you the S&P 500 and the ranges are smaller than last week. Last week we priced in a $65 expected move. This week we're pricing in a $58 expected move. This is going to be a shortened week as Thursday will be a US holiday and July the 4th. So we're only going to have 4 trading days this week. Hence the smaller range of $58. So if you go $58 from the close on Friday up, you're going to hit 5518 spot 49. That will be the top edge of the expected move for next week. And the bottom edge of the expected move for next week, 5402 spot 49. Saying how we were sideways this week, I wouldn't doubt it at all if we don't trade sideways next week. A lot of people are assuming that, since we got the PCE info in, the PCE info was good. It was, it wasn't terrible. The market, for some reason, might have taken it a little bit bad. But you can see core PCE was lower than 0.3. It was 0.1%, which is good. And then your year-over-year inflation, or core PCE, was expected at 2.6, and we got 2.6. So nothing bad there. Inflation is coming down a little bit slowly. All right, so the market did, however, go up, get almost to the top edge of the expected move, and then we fell right back down to close the week unchanged on the week. In fact, if you look at the weekly candle, you're going to see a doji. We did take out the previous week's high, and we even closed lower than the previous week's close. So if this is going to be an evening star reversal formation, then we should expect weekly res to hold, or, maybe daily resistance a little bit higher. We'll see what happens next week. If you are expecting the markets to rotate lower, then just please make sure that you are mitigating that risk, right? You're maintaining a small risk measure. You don't want to risk more than 1% of your total account's equity whenever you're making these trades, whether you're using options or shares or futures for that matter. Right now, market's expecting next week to be a little bit sideways, so be careful out there if you are going to trade next week. Remember, there is a day off. Oil was a market that I spoke about last week, and I said that, if the government is going to put more supply on the marketplace to keep the inflation levels, or the headline CPI number that is, lower, then obviously they want oil to trade lower. Oil definitely struggled to get above and hold above last month's open, so it is a bullish engulfing monthly candle right now. And it did close as a bullish engulfing monthly candle, but it did close back under May's open. So you did not close above last month's open. So this to me looks like it is a lot of consolidation. Now here's the question. Is it consolidation to move higher? It is coming out of a move to the upside. Or is this just expecting a move lower and it's accumulating a whole lot of sell side liquidity up here? We don't know, right? I am expecting it to go lower. I am, but that's just an opinion. Obviously, I have no idea what price is going to do ever, but my opinion is we will see oil go back lower, and that's just to keep the inflation numbers down. The market's the market, and it can definitely continue to go higher. I said in last week's upload, if we see it start to close higher highs and higher lows on a daily closing basis, then obviously my thesis would probably be wrong. And seeing how we didn't really do anything last week, we just essentially traded sideways. We look at a weekly candle, you're going to see it was a little bit higher of a weekly close, and we did get a lot of stop outs, and we did test weekly supply here. We'll see if that area holds as resistance moving forward, and that price is going to be 82.046. If that level holds, then we will still look for shorts, but we could also watch daily res. Daily res is going to come in right above May's open at 81.54. And May's open is 81.24. Pound dollar was a short setup that I discussed on last Saturday's video. I said if we come up and test this candle's open, we would be looking for short entries. We got almost up there, but not quite. We did test this candle's low, and that's when it fell and rolled over. And it rolled over right at 3 a.m., which is London's open. So if you were able to short the 3 a.m. candle during the London open, you did pretty good, because the very next day, it did ultimately roll over and go down to Q2's open. Quarter 2 is the level that I said that we would be watching, and we need to see it break down below this if we're going to see continuation of the downside. Obviously, a very strong dollar could help this move lower, so we'll see if the dollar is able to continue higher or not. The dollar did in fact come into resistance at 106.121, which is quarterly resistance. Quarterly resistance all the way back a year ago. That's going to be resistance until you close a quarter candle above it. And that is where we tested Wednesday and Friday. And we failed both times, but since it's a quarterly level, I don't really care too much about daily candles rejecting. So if the dollar is going to continue to move higher, then we would expect the pound to move lower. And if you are in that short, just move your stop to break even and hold on to it. As if this does continue to go up, you should be good. If it does reject here, if the dollar does reject here, then that pound trade's going to be wrong in the long term. But we'll see how it plays out. Now, there are a few people out there that are suggesting that we are going to see a recession. All right, here's a chart that I got from Chiavaco Capital. He's a good follow if you want to go follow him on YouTube. He also has a Twitter handle. I just don't know the Twitter handle, but the YouTube channel is at Chivaco Capital. This is where I got the chart. So, I mean, he's a good follow. Go give him a watch. This basically shows what happens when the market prices in a recession. You can see back here in 2008 when the market had an increasing economic and credit market fears, aka recession. You had a big, huge spike on this chart. This chart is the XLP, which is consumer staples, versus the S&P 500. When you get a spike of like this means the market is pricing in recessionary fears, and here we are currently. So this does not look like this, does it? Now, is it possible that we're here and we're going to make a bottom and then shoot up? It's possible. But we have to wait for that to occur before we can start to say that the market is pricing in a recession. Right now, what we can say with 100% certainty is that the market has not yet, or is not yet, pricing in recessionary fears, as it is making lower highs and lower lows. This chart is for recession. Now we must look at increasing fears of inflation. So here's inflation fears number one. I'm sure if you've been trading since back in 2022, when inflation did in fact, or the headline CPI number started to raise, we did get this spike here. This spike took out this high and continued to move higher. This was while inflation was moving higher. This is the market pricing in the fear that inflation is going to move higher. And this is where we are right now. You can see that literally we had a nice little move up right there. And then so far the market is trading down. So ask yourself, do you see the market pricing in a fear of inflation going back up? Not right now, it isn't. Next chart and the last chart. This one is also the same scenario. It is increasing fears of inflation. You can see it's written right here. All these charts came from Chivaco Capital. Like I said, if you want to watch his videos, at Chivaco Capital on YouTube. You can see how we got a huge spike right here. This is a different chart. This is the CRB versus the SPX. I cannot pull that up on TradingView. I can't pull up CRB. Basically what it is it's the commodities versus the S&P 500. Well, anyways, in increasing fear of inflation, we get this spike higher. And then what are we doing now? We are making lower highs and lower lows as this continues to move down. So if there were increasing fears of inflation out there, this chart would be going up. Is it possible, once again, that we find the low somewhere and it does end up spiking up? Yeah, it is possible. But as of right now, it isn't. So people are going to get really bearish out here, because once you have this steepening of the yield curves, in the past, it has generally called a recession or a small pullback, at least in the markets. So I'm not saying that we can't or won't see a pullback in the marketplace in the future. I am simply saying, with the information that we have right now, the charts are not telling us that the market is pricing in inflationary fears and the market is not pricing in recessionary fears. So as long as those two things are not being priced in, I have to stick with the overall trend. And right now, the trend is up. Now, is it possible we get a pullback based on the fact that tech stocks are pulling back a little bit? A lot of people would say that the NVIDIA move up is the basis for the whole move up or the rally in the S&P 500. I would say they're probably right. And yeah, I would say if NVIDIA does correct or have a significant pullback or drawdown, then the S&P 500 will probably follow suit. But more than likely what will occur, as long as inflationary and recessionary fears stay on the lows, this will probably just create a longer term range of consolidation and then break out back to the upside. Now, all of this is dependent on the fact that something major doesn't break between now and, in the future. It's going to take a long time for the steepening to actually work and get back above the zero line. So until that happens, I'm going to stick with the overall trend. And right now, the overall trend on everything is up. You guys make sure, if you ain't subscribed yet, you hit the subscribe button, hit the bell notification. Make sure you like the video. Make sure you guys trade safe, trade smart. And as always, happy trading, everybody.